Hi guys! In this video you will find out what is actually better for auto expenses, standard mileage rate or actual expenses. Let's dive in. If you're new to this channel, my name is Kat and I have more than 10 years experience working in different industries, different companies. I was working as a music business management CPA, I was working at Ernst & Young, and I have been freelancing for the last 3 years. So this channel, I'm going to post lots of useful videos for you to learn a new tax software or become a tax professional from never preparing taxes before. So please subscribe to my channel. Alrighty, let's go back to this video. So let's start with who can deduct auto expenses. So those would be business professionals who use auto for their business work-related needs. So that includes self-employed individuals, contractors, also known as 1099 contractors, and also business owners. So there are two ways you can deduct your auto expenses. One called standard mileage rate and another one is actual expenses method. So the difference between those two are, for standard mileage rate, it's a simplified method where you can deduct fixed amount per each business mile driven. And so for that one, you don't need a detailed expense log for auto expenses, but you do need a detailed mileage log for business expenses driven. Another one is actual expenses. So you can deduct actual expenses spent, and I'm going to get into details what those expenses are. So for this method, you do need to keep track of all actual expenses, and also you need to figure out what the business percentage of all those for your car usage is, right? So let's learn more about them. Standard mileage deduction. So IRS set up a standard mileage rate each year. So that means for each business mile you've driven, you can deduct certain amounts. So for example, for 2024, the rate is 67 cents. So for example, if you have 1,000 miles driven, business miles driven, for that 2024, you can deduct 670 as your auto expenses. So it's a simplified method. All you have to do is to make sure you keep tracking your miles in your business miles. So let me also explain you what are business miles and what are business expenses related to that. So when you drive from your one work location to another one, another expense would be going running your business errands. So for example, going to the bank, depositing the check, or buying office supplies, things like that. Also driving to see your client for business. So those would be business related, business related events. Another thing I wanted to mention is that commuting from home to work are not considered business miles. So make sure you don't include those in your business mileage. Actual expenses method involved actual expenses paid for operating the car. So you also need to make sure you know your business percentage of all of this. So for example, you drive your car, you think 20% of what you drive is actually for business. So you make sure to use that percentage for a business use of actual expenses. So what are actual expenses? So actual expenses are gas, tires, registration, insurance, all that. Repairs also can be. And if you have a leased car, lease would be actual expenses as well. Also, if you own a car, you can depreciate it. If you're new to depreciation, it's just you take a cost of your car and you can deduct that as each year for let's say for 5 years. So let's say your car is 10,000. Depreciation divided by 5 years would be 2,000 a year. And then we make sure to multiply it by business percentage. So that's actual expenses. So you make sure you track actual expenses. So you have a log of all expenses. You need all receipts and things like that. Pros and cons of standard mileage rate. So the pros would be, it's easy to keep track of it, right? So you just calculate your miles and that's easy. And then you just multiply it by whatever IRS rate is, which is for 2024 is 67 cents per mile. So another pros would be just, like less records you need to keep. The cons would be probably if you have, it might not reflect all expenses, so your actual expenses can be higher. It doesn't include like insurance or maintenance or things like that. Another problems that I potentially can see, if you have an expensive car with low mileage, then you can't deduct much, right? So that's about standard mileage rate. Pros and cons for actual method for calculating auto expenses. So the pros would be, I think it reflects more actual expenses. So it's more related like how much you actually spend for car expenses, right? It also can be beneficial if you have a very expensive car with low mileage. And in general, I would assume it would provide you a higher amount of deduction for auto expenses. The cons could be that it's a more record keeping, so you want to make sure you keep records of all auto expenses. And another thing is like, I think IRS looks into actual expenses more than mileage rate. It's like, it's just potentially can create, when audit comes around, it's harder to prove things like that. Like, because it's kind of hard to estimate what your actual business percentage for using that car was. There's pros and cons to those two methods. So now we'll talk about IRS limitation for standard mileage versus actual method. And I think this is the most important part here because that's something to remember. Sometimes you cannot just use standard mileage or you cannot just use actual expenses for one reason or another. So let's go. So now I'm going to show you on the screen IRS regulations that actually says those things. And it basically tells to use standard mileage deduction, you have to own or lease a car, but you also want to make sure you don't own or lease more than 5 cars for business purposes, right? So 5 cars would be limitation. Also, if you took Section 179, you cannot do standard mileage deduction for that car. If you took a bonus depreciation for that car, you cannot use standard mileage deduction. And there is another thing about something like, also, if you did depreciated the car other methods than, straight line, you cannot use standard deduction as well. And there is another rule about something was in 1997 that not applicable anymore. So who cares? Anyway, so those things. So in general, what I'm trying to tell you here is there is pros and cons to everything. So the idea is to use whichever is higher, whichever give you more expenses for your clients, right? For you, and whichever is higher. But in general, if you did bonus depreciation for that car before, if you did Section 179, or you depreciated it in other methods than standard line, you cannot use standard mileage deduction. And that can be just an answer to your question. So hope you enjoyed this video. Have a great day. Talk to you soon. Well, hope you enjoyed this video. Please comment below what you think, and if you maybe have another answer or maybe there is something else you want to tell me, I would love to hear from you. Please subscribe to my channel. I also sell online courses teaching how to become tax professional, how to start making money as a tax professional, and also how to use different kind of tax software. So please check it out, my website remotecpanla.com, and I'll see you in the next video. Bye bye.